Hi guys, good afternoon and welcome to Your Stocks. I'm Pavitra Parekh. We have a whole host of queries to get to and we have some guests joining us to take you through that. But first up, a quick look at the markets. We're currently holding above the 18,000 mark, but it's 18,015 on the Nifty. So a bunch of the recovery that we've seen has been given up. We went all the way up to 18,100 almost, and from there it has been quite a slide. So that's what's happening with the Nifty. A lot of this trend today though is coming through from the banks, which are up 0.4%. So keep your eye out on some of the larger ones. We'll get back to the market action in just a bit, but first up, let me invite our guests on the show. We have Ruchit Jain, who's lead research at 5paisa.com, as well as Mayuresh Joshi, head of equity research at William O'Neill, who join us. Ruchit as well as Mayuresh, thanks a lot for joining us today. We have a lot of queries which have come in, so I'm going to get straight to it and have you sort of advise our viewers. We have Nitish Gandhi, who writes to us from Chennai. He says he holds 25 shares of HCL Tech at 1,200 rupees. He also has 20 shares of Sun Pharma at 1,000 rupees, and he's making profits in his investment. So let me come to you and ask you what you think about both of these. Mayuresh, if I can come to you first on HCL Tech. I mean, of course, in the past month or so, we've seen a good rally in, some of the tech names. Even HCL Tech is up around 12% for the month. How would you look at this one? Do you think there's, room for further upside here? And of course, Sun Pharma, we've been talking about non-stop on the channel. It's seen quite a rally.
Oh, absolutely. Afternoon, Pavitra. No, both the stocks, specifically HCL Tech, came out with a very good set of numbers. I think if you probably stack up the IT companies and the top tier ones, HCL Tech followed by Infosys and TCS probably had the best numbers in that stack. On HCL Tech, I think the revenue beat as well as the margins that they reported have been quite significant at this point of time. Now, the expectations largely specifically on the EBIT margin front were close to 17.5%, the reported margins of 18%. Having said that, the guidance which has now come down for HCL Tech, I think that is something which has probably just spooked the street in general. And what probably happens in terms of the recessionary fears in the US, probably clawback of orders happening from Q4 onwards. Margin pressures because of attrition still continue, and added costs coming through in terms of more outsourcing expenses, travel-related expenses, so on and so forth. So I think the cut in the margin guidance on the top end from 18 to 20 to 18, 19, that probably just spooked the street a tad bit going forward. But largely, I think margin should sustain. Deal wins have been very, very good so far. They're sitting on a very healthy order book. And therefore, I think as per the O'Neill methodology, HCL Tech is trading above all its moving averages at this point of time. So I think there is some pain for the sector as a whole. The weakness and the underperformance might continue, but if the investor has a longer-term view, he can very well hold on to the stock. When it comes to Sun Pharma, I think Sun Pharma along with Cipla have been clear outperformance when it comes to the pharma space. Again, I think the pipeline that Sun has, Pavitra, specifically in terms of the expected products in the specialty portfolio, Ilumya, Sequoia as an example, that will drive the US specialty sales to more than $1 billion in the next 2 to 3 years. The Indian business is performing well, and you probably need to look at these numbers ex-COVID as well. And therefore, I think the US market with the specialty sales, expectations in terms of the India business expected to do well, and the rest of the world expected to continue its good show. I think the numbers should probably come out both in terms of margins, which should get sustained in spite of elevated R&D costs, and the expectations of FDA approvals or resolutions, if any, for the next few figures, causing tailwinds to the stock as well. So it's trading above the key pivot levels with a good RS strength. EPS strength needs to probably improve on the O'Neill methodology, but somebody holding this can hold on.
All right, you can hold on to that. I'm going to have to take a short, break from the queries because HDFC's numbers are breaking on the exchange's net profit at around 4,400. This is versus the poll that we had of 4,000. So there has been a beat on that one. I'm waiting by for more. So revenue has come in at just about 15,000 crores. This is versus 12,000 200 crores that we saw last year. So there's quite an increase on that front as well. These are the numbers that we have for now. I'm going to try to bring you some more details. Remember that we did expect quite a good AUM growth as well. That's what the sort of preview was throwing up. So let me see if I can get those figures. For now, what we're working with is the net profit, where there has been a beat. It's around 500 crores above what was, estimated in the poll. And the revenue has come in significantly above what we saw last year. You can see the stock also is moving up. It's taken a sharp spike as soon as the results are out. It's actually moved into the green as well right now. That is HDFC. And I'm going to try and get you some more details. We should get a reaction in as well. The net interest income has come in 4,600 crores on the net interest income. So that one also looks quite good. And, like I was pointing out, the stock continues to gain actually right now. So I'm sure we are waiting for more details on the asset quality, on slippages. Those are numbers that we're watching out for. But even on the net interest income, you can see that there's been a significant beat. It's coming at around 4,600 crores. This is versus around 4,500 crores that we were working with. So on all the parameters that we have so far, whether it is the net profit, the net interest income, and even on the revenue, there seems to be quite a beat on this stock. And it was expected to be a good quarter as well for HDFC. So let's see what else we can pick up in, for these stocks. In fact, let me toss it to Mayuresh. And Mayuresh, do you track this stock as well?
Well, absolutely, Pavitra. I think a very stable set of numbers, because I think the large expectations in terms of the top line growth are probably there at the right time. Again, I think what probably happens in terms of the merger, I think that is what the street is more interested in. Because I think net asset, asset quality pressures, obviously HDFC is impeccable on those numbers. But I think what happens with that and the commentary related to that is something that the street will look out.
All right, that is on HDFC, looking like quite a good set, like Mayuresh was also pointing out. Ruchit, do you want to come in on this one? I don't know if you heard me read out the numbers, but for the net interest income, it's come in at over 4,600 crores. So there's been a beat and it's come in well above street estimates on that. The net profit is up over 17, almost 18% if I look at it on a year-over-year basis. So whichever way you look at it, this looks like quite a good set of numbers. Do you want to weigh in?
Yeah, hi Pavitra. Yes, I think if we look at last few weeks, then definitely I think it somewhat has been we have witnessed a good buying interest in the stock as well. After that correction towards 2250, 2300, the stock has gradually moved higher, and as of now, the short to medium term trend for the stock still continues to remain on the positive side. So I think the results impact should be seen with a positive bias, and on the higher side, we can expect the stock heading towards the 2560, 2570 mark in the near term.
All right, we also have Prakash Diwan joining us to help us analyze these numbers. Prakash, good afternoon. I have a few of the numbers with me over here. The net interest income has come in at 4,640 crores. This is versus the poll that we were working with of 4,580 crores. So that one definitely looks like a beat. There's a beat on the profit front as well. Revenue growth looks quite healthy. Your first take on HDFC's numbers? The stock is definitely spiked up.
Oh, absolutely, but I mean, it deserves to.
Yeah.
And, interestingly, there were no expectations for these numbers to be so upbeat, actually, when we started the session today and even till yesterday, except for a little bit of a catch-up that both the HDFC twins were playing. But these numbers tell you that even in a quarter which is usually not the best, they managed to kind of grow. And given the fact that the residential real estate pickup is so distinct and secular in terms of a trend and across geographies, I think there's no reason why I'll be surprised if they have not also clocked some market share gains in this quarter. So there will be a lot, the loss would be for LIC Housing in terms of losing market share, and the gains would be for the likes of HDFC and PNB Housing. And also, I think HDFC has done a stellar job, and I'm very excited about the impending merger between the two giants, because that's going to unlock tremendous amount of value as well as create a lot of synergy. So if you look at these numbers in that backdrop, fantastic. There's nothing to complain about.
Oh, absolutely nothing to complain about. We are also trying to get few more numbers in. Non-individual gross NPA has come in at 3.9% versus the 4.4%. I'm going to get back to Prakash in just a bit, but Abhishek is also joining us with a little bit more of a fine print on this. Abhishek, at the start, definitely looks like quite a solid set.
Well, it's a good set of numbers coming in from SDFC Limited, given the fact that, even the spreads have actually increased on a sequential basis. So it's come in at 2.28% when compared to 2.25% in the previous quarter. The asset quality has improved overall. The gross NPA is at 1.59%. This compared to 1.78% in the previous quarter, largely driven by the non-individual segment, wherein the gross NPA ratio is now below 4% level when compared to 4.44% in the previous quarter. The gross NPA even in individual portfolio has improved by 7 basis points on a sequential basis. So operationally, it's a strong quarter given the fact that operating profits are up almost 49% YOY and about 15.2% on a sequential basis. So strong set of earnings momentum coming in from SDFC Limited in this quarter. Back to you.
All right, Abhishek, thanks a lot for getting us that complete roundup. Prakash Diwan is still with us. Prakash, we have the asset quality figures coming in now. Of course, for HDFC, this is not really a concern. It looks quite good. Okay, the AUM growth is here. It's at over 15%. This is year over year. And on a sequential basis as well, they've seen a growth of 2.8%. Prakash, your thoughts on the AUM growth?
So the AUM growth, even if it's just 2.8 on a sequential basis, it's definitely very formidably positive for the simple reason that this is not a quarter that you would probably see incremental growth happen. The best 2 quarters are yet to come. The first 2 quarters are usually lean, but they've managed to do that almost 3% growth, which is good. Which also tells you, Pavitra, that whatever loans have kind of started, the tenors have started getting over, they've at least been able to build a book which is stronger. And with every incremental book that is being built now, the loan that get added to the book, you remember the cost of funds is higher. For HDFC, that's a huge advantage. Their cost of borrowings are one of the lowest in the market, and the spreads will only become healthier as they pass on the cost to customers. And sometime around, I think, middle of the quarter, they had increased these lending rates, and that's effective now. That will probably feature in the next 2 quarters as well in terms of headwind. So I think asset quality wise, even the non-individual loan section, thanks to a lot of the cleanup that's happened in the industry after RERA and all has come in, it's very clear that you could grow faster with wholesale lending to non-individuals as well, and still not be worried about NPAs growing. So they managed to do that. The spreads are healthier than probably most other players, and I think the AUM growth is also just beginning to show that improvement. So I wouldn't be surprised if this actually deepens in the next 2 quarters in terms of growth metrics.
All right. Prakash, would you have any kind of estimates on what you're expecting then in terms of AUM growth, say for the coming quarters? Because, like you mentioned, these 2 quarters are slightly more lean. So if you can take us through what you would expect for the coming few quarters?
So the basic run rate that they've clocked even in the pre-pandemic era was about 4.4%. But of course, as it's non-linear in terms of quarter on quarter. But I would expect that the next 2 quarters they'll probably end up on a YOY basis. I'm not comparing because they were very different environments. For 21 and 22, last quarter was very different. But I'm saying at least they'll probably grow in the mid-teens. In the mid-single digits, which is about 6.5% kind of a thing. And if the last quarter is not derailed by the process of the merger, and they don't take their eyes off the business in that sense, they'll probably even clock some record numbers there. But, the exciting part about the merger is going to take center stage as we get closer to Jan and all, because once the approvals are done, it's just a process that has to be time-bound process that will have to be waited for. So I think then numbers will probably take a back seat, and it'll be probably the merger that will take center stage. But I do expect about 6.5% kind of growth for the second half of this year.
All right, 6.5% kind of growth. Prakash, thanks a lot for joining us and help analyze these numbers. That is HDFC. Just to sort of run you through the numbers again, the net interest income looking solid at over 4,600 crores. So there's definitely a beat, and it's coming well above what the street was expecting. On the profit, revenue, all of those looking good. Assets under management have grown around 15% on a year-over-year basis. Sequentially, it looks a little bit muted at around 2.8, but this is a lean quarter, so that's perhaps not not a worry point at all. The spreads have improved to 2.28% from the 2.25. So that is a key positive as well. That is a wrap on what's happening on HDFC's numbers. But we quickly have to take a short break now. When we come back, we'll get back to the queries that you've written into us with, and we'll have our guest to take you through that. Welcome back. You're still tuned into Your Stocks, and our guests are still waiting by. Ruchit Jain and Mayuresh Joshi are with us. Ruchit, Mayuresh, apologies. We were hit by the earnings of HDFC, but we're in the thick of the earnings season, so that can't really be helped. But let's quickly try to squeeze in some queries. We have Akshay Jain, who writes to us from Pune. He's actually calling in with a query. He says he has investments in Axis Bank and ICICI Bank. Akshay, can you hear me?
Yes, Pavitra, I can hear you.
Hi, Akshay. Please go ahead. Our guests are also on the line. So go ahead and ask us your query, and then I'll toss it to them.
Yeah, good afternoon. So I hold 1,500 shares of Axis Bank at 725.
Okay.
So my view is long-term, almost 7 to 10 years. Okay. And I hold 350 shares currently in ICICI Bank. Sorry, 850 shares in ICICI Bank. And I want to accumulate it more. And my view is ultra long-term for ICICI Bank, mostly 15-20 years.
Okay. All right. I love when people, write in with a long-term view and a long-term horizon. So let's actually toss that to Mayuresh first. Mayuresh, you heard that he has ICICI Bank as well as ICICI Bank. He can hold for the long term, 7 to 10 years is what he's looking at. So take us through your call on both of these. And within the banking space, is there a better way to play it? Of course, these have been some of the favorites, especially ICICI Bank, right?
Oh, absolutely, Pavitra. No two ways about it.
Yeah.
I think numbers were stupendous. I think if you probably look at all numbers that the top tier banks have posted have been very, very good. For Axis in general, I think the beat was across operating metrics as well. I think NIMs at 3.96, almost 4%. Solid NII growth. The credit growth specifically is expected to continue for the sector as a whole and for the banks, specifically the large banks in general. If you probably look at the stress pool as well, for all banks and for Axis Bank in particular, I think the stress pool, which probably is the combination of net NPAs plus restructured, plus the BB and below portfolio, that has come down to an all-time low of 1.89%. So therefore, I think with retail expected to grow extremely well over the next few quarters, NIMs expected to get maintained around this mark, and with excessive provisioning done on the balance sheet, I think the adjustments that were needed or the expectations on ROAs of almost 2%, almost achieved that at 1.8% with ROEs at 18.5. So the Citibank acquisition might be a little bit dilutive from a near-term perspective, but overall, I think the numbers are looking extremely good. So I think there is no two ways in terms of holding Axis Bank as well. For ICICI, I think the kind of loan growth that came through quarter on quarter, I think, because that was very, very pertinent in my opinion. 6%, both in terms of advances and deposits growth. The net NPAs, if I'm not mistaken, came down to 0.6% from 0.7%. The provisioning as on the balance sheet, as Axis also has accelerated that. ICICI Bank has almost got 80% in terms of provisioning as well, with tier 1 staying at almost 70%. So I think solidly placed in terms of capital needed to excessively grow in the next few quarters. Asset quality pressures coming off. To add more, as per the O'Neill methodology, Pavitra, I think 936 is a key pivot for ICICI Bank. So if it crosses that pivot of 936 as per our methodology, the investor can probably go on and add more to the ICICI Bank stock.
All right. So very positive on both of these stocks. And Akshay, Mayuresh says that you can definitely hold on. Let's also ask Ruchit on his view. Ruchit, you take us through how you're looking at it. For something like Axis, I'm sure the charts have been very interesting to read. For 1 month itself, it's up 20%.
Yes, definitely. In fact, since his view is for longer term, then I would focus more on the monthly charts.
Yeah.
And if you look at what has happened in last 1 year, when the market has been in the corrective phase from last November to this November, then I think within this corrective phase itself, within the private sector banks, ICICI Bank, both ICICI as well as Axis Bank has held on quite well. So I think the longer term trend continues to remain positive. There is no doubt about that. You can look to keep a buy and dip approach and look to add more quantity in case if we get any dips in the near future. And in fact, I would also add another name from the banking space if he wants to diversify it more. Then I think State Bank of India. I think that also, from a long-term perspective, the chart structures are quite good. Where after that major consolidation phase from about 2004 to 2017-18, I think the price structure looks quite promising from a long-term perspective. So ICICI Bank, Axis Bank view is much positive on both the stocks. SBI is also one stock which you can look into if you wants to diversify more.
All right. So, Akshay, I hope that helps you. Both of these stocks, you've made good money on them. And, our experts believe that there's lots more room left here. So, these are good picks within the banking space. And, if you do want to diversify, perhaps a state bank is something good you can look at. But with that, let's move on to our next query. C. Suresh Kumar calls us from Hyderabad. He says he holds investments in Alok Industries. Mr. Kumar, please go ahead.
Namaste. I like both of your analysis, Mayuresh as Ruchit. I like your analysis very much. And we purchased my query is about Alok Industries.
Okay.
After Reliance took over from the NCLT auction and all, I expected this to do very well. It has turned around very well. And profits also are there. But why it is not reflecting into the price? For the last 18 months, it is not going up at all. Though they have purchased at very cheap price and performance also is okay. It is not reflected. What is the reason?
Okay. Mr. Kumar, can I ask how long you're willing to hold for?
I am willing to long, even 5 years also.
Okay.
If it is promising, I will hold long time.
All right. Let's ask our experts then what they're recommending on Alok Industries. Ruchit, this stock has really, sadly, it's not done well at all. It's currently at 16. He bought it at 25. So he is definitely making a loss. Do you think that there is the chance that he could recover this loss?
Firstly, I would like to thank Mr. Suresh Kumar for their appreciation. And I think I just give a technical check. The technical trend for the stock has been negative from past many years. And even if we look at the recent pullback moves, whichever were there in between, the pullback moves have not been supported by higher volumes. So in spite of the news-based, the role of Reliance Industries in this stock, I think if there is no buying interest based on the price volume action, I think the underperformance would continue going ahead. And even if you're looking from next 4 to 5 years perspective, there could be much better opportunities in some other mid-cap segments. So my advice would be to look for exit opportunity on every pullback move. 18 to 19 would be the resistance level going ahead, and any pullback towards that 18-19 range should be used an opportunity to exit it.
All right, exit on a pullback. Quickly, I'm going to get to Mayuresh as well, because Mayuresh, you heard, he is willing to hold on for a long time. He said he can look at even 5 years. Do you think with that time horizon in mind, this could be an okay bet?
No, so again, I think we have to differentiate in terms of leaders and laggards as well. So our methodology is very, very clear in terms of focusing on leaders. So I think, Mr. Suresh, you probably need to just swallow the bitter pill here. Maybe the stock can do well going forward, but I think if you probably want compounded growth with stability in terms of staying with a leader, which can probably survive market cycle phases as well, look out for leadership stocks in the banking space, as we have discussed. Look out for leadership stocks, as an example, like an L&T within the capital goods space. Government is going to spend exponentially in the next few quarters. So I think capital goods, domestic cyclicals need support of banks, and the larger banks are probably very well placed to do that. So I think if you probably have the right vision in terms of what the government wants over the next 4 to 5 years, the capital goods stroke private banks should do exceedingly well. So focus on leaders within the spaces if you have a 4 to 5.
All right, got that. So that is a unanimous view on Alok Industries that perhaps best to get out of this one. Ruchit, Mayuresh, thanks a lot for joining us on the show. We'll have to leave it at that. It was a short one today because of HDFC's earnings, but thank you for taking out the time and helping all of our viewers. Remember, you guys can write into us with all of your queries on the show, and we will take it up with our experts. Stay tuned. Closing bell will come up right after this short break for the last hour of trade.